Morning, Steve Reed in Chicago with the morning grain comments. Hope everybody had a safe and good new year, and hope 17 brings you prosperity and also a safe year. 17 is going to be an interesting year, at least starting out. We've got the dollar sharply higher today on optimism on the U.S. economy. We've also got crude up sharply, and I think that's part of the OPEC deal, and maybe a little bit about the expectations of a better economy, maybe even globally. As far as the grains are concerned, beans are unchanged, maybe 2 cents lower. We're hovering right above that psychological $10 level. It's also the 100-day moving average. And if I'm a fundamentalist looking at the January 12th report, I'm saying to myself we should break down below this $10 price level and trend lower into January. If I am looking at some of the outside things that don't normally affect prices, the first thing is inflation. You know, does somebody come in and buy beans because there might be an inflation threat? Second thing is South American weather isn't perfect. It's too dry in northeast Brazil, and in the heart of Argentina, they've received 10 inches of rain over the last couple of weeks. So parts of Cordoba, Santa Fe, northern BA is too wet. And maybe they didn't get all of their soybean crop planted. And so some people say that, okay, this is the crop, it's good, but it could go lower instead of higher, and that could add a little premium to the beans. Finally, it looks like the Chinese are buying soybeans above their needs. They think their currency is going to continue to slip lower, and that they're buying these beans as a hedge and storing them. So we might see a little inflated demand in the beans, although that should offer support to the market because it looks like the Chinese are pricing their beans in Chicago futures rather than the Dalian futures. Over in the corn, we're sitting right above resistance. There's no reason to push through that level unless cash market gets strong. We expect the January 12th report show a little bit bigger corn crop and record corn stocks as of December 1, so that kind of keeps the lid on prices. And as far as wheat is concerned, we're just sitting here at $4 and not going anywhere. And there's too much wheat in the world. The Southern Plains is dry, and we're going to have to watch that pretty closely. I asked our weather guy this morning if there's anything that looks hot in 2017 globally. And he says not really. He looks for normal weather in 2017 globally. We don't have a dominant La Nina, we don't have a dominant El Nino, so we're kind of neutral in that spot. So we're not going to see any highs and lows as far as crop conditions are concerned. So in theory, without a crop problem, prices should go lower in 17. So we've got a lot to look at as far as the new administration is concerned. January 20th will be a big day. The new president expects to hit the new presidency hard and running. He's already talking about big changes in some of the Obama's legislation that they passed. So we'll see if that continues to help the stock market, if that continues to help the dollar. We'll watch OPEC as far as crude is concerned, and without a weather problem, grains might take a back seat to any excitement on the upside. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.